On Wednesday, the US dollar recovered against the euro and the pound sterling after a considerable drop. Meanwhile, the yen continued trading near its 34-year low, even though the Japanese monetary authorities warned about intervention once again. The US dollar index recovered to 105.85 amid the news that growth in the US business sentiment had slackened. However, events that may shape the greenback will take place later this week. Thus, traders will focus on some important publications. Let us find out what reports should be taken into account while developing a trading strategy. You are watching a Trader's Calendar Overview. Early on Thursday, all eyes will be turned to the consumer climate data from Germany. This week, traders have already assessed some key reports which reflect an improvement in the business sentiment in the manufacturing and services sectors. At the same time, the sentiment in the industrial sector of Europe's largest economy remains vague. The Federation of German Industries predicts a 1.5% drop in production without an increase in exports. On Thursday, traders will focus on a consumer sentiment. Notably, last month, the GfK Consumer Climate Indicator rose to -27.4 from a -28.8. And this was the highest reading since the beginning of the year, which reflects a moderate increase in income expectations and economic prospects. At the same time, consumers' desire to buy goods and services did not change much, while the intention to save money decreased. The expected report may unveil a decline in a consumer sentiment to -25.9 points. If the indicator meets the forecast, the euro may experience short-term pressure, while a jump in the indicator may support the single currency. The publication of the US GDP figures for the first quarter of 2024 will be the key event on Tuesday. The United States continues to outperform its global competitors, although the Federal Reserve has raised the interest rate by 525 basis points since March 2022. Not so long ago, the Federal Reserve became concerned about stronger than anticipated data on inflation and employment, and this means that its fight against high pressure stagnated or caused the opposite result. The data for the fourth quarter showed the US economy expanding by 3.4% on a yearly basis. The growth could be explained by a rise in consumer spending and investments in non-residential businesses. Analysts predict that Thursday's data will show a slowdown in the US economic growth. According to the forecast, GDP increased by 2.5% year-on-year in the last quarter. Strong data may boost the US dollar index, while lower readings will put pressure on the US currency. On a Friday, traders will shift their attention to Japan. The Bank of Japan will announce its key rate decision and provide monetary policy statements. The pressure on the yen has persisted this week, and the dollar-yen pair has been hovering in the range between the high of 154.50 and the low of 155, even though Japanese Finance Minister Shinichi Suzuki issued the strongest warning about the possibility of intervention on Tuesday. He said that last week's meeting with American and South Korean counterparts gave Tokyo reasons to act against the excessive movement of the yen. Curiously, the Bank of Japan is likely to keep the monetary policy parameters and bond purchase volumes unchanged after a two-day meeting that will end on Friday. The key interest rate is expected to be 0.10%. In this slide, traders will pay close attention to the following statements from the Bank of Japan. Although the regulator is likely to show readiness to tighten its monetary policy once again this year, its cautious approach may accelerate the growth in the dollar-yen pair to 160. If the regulator surprises with its decision of hawkish statements, the currency pair may slide below 150 yen. There is no doubt that the publication of the PCE price index will be the main event at the end of the week. Notably, the PCE Personal Consumer Spending Price Index in the United States increased by 0.3% last month. On a yearly basis, PCE inflation rose by 2.5% after an increase of 2.4% in January. Excluding volatile components of food and energy, the PCE price index climbed by 0.3% month-on-month and 2.8% year-on-year last month. Although February data indicated that price pressure was lowering, the pace slowed down compared to the first half of the last year. Meanwhile, inflation remained above the U.S. Central Bank's 2% target. This time, markets expect a moderate monthly increase in the Personal Consumption Price Index by 0.3%. And the same rise is expected in the core prices on a monthly basis. Meanwhile, on a yearly basis, the PCE index advanced to 2.6% from a 2.5%. The core indicator, excluding volatile goods, may show slower growth of 2.6% in March, compared to 2.8% in February. In addition, traders should pay attention to two more reports that will reflect personal income and spending. Income may advance to 0.5% from a 0.3%, while spending could decrease to 0.6% from a 0.8%. The data will be of great importance ahead of the Fed's meeting, which is scheduled for the next week. Any sign of a smaller price pressure and a slower growth in indicators may cause a slump in the US dollar. On the other hand, better than anticipated figures will support the greenback. This was a brief review of the macroeconomic events from InstaForex analysts. Monitor fresh releases and open profitable trades. See you next time.